We saw losses for stocks today. Investors reacting perhaps to ratings cuts from some analysts and a decline in U.S. factory orders. Courtney Donohoe has the details from the New York Stock Exchange. Courtney.
Well, Pimm, rough start for the first full week of October. Stocks falling, Dow down 78 points, and two-year yields at record lows. It's a busy week for the markets. Investors pulling back before the kickoff of earnings season later this week. Plus, big focus on the monthly government jobs report coming out on Friday. People holding off on those big bets before those numbers. Also, investors taking some money off the table after we had that rally in September after the 9% gain for the S&P. But concerns about the economy creeping back up again. Capital goods orders saw the biggest increase since March, but overall factory orders falling 0.5%, pulled lower by weaker demand for aircrafts. And even though we did see an increase in pending home sales, 4.3% gain in August. Taking a step back and looking at the same month 1 year ago, pending sales down a little more than 18%. As one strategist told us, economic data over the past few months, they've been so mixed, taking 3 steps forward, 2 steps back. So investors, they're just looking ahead to earnings.
Now, Courtney, let's just take a little bit of time to look at the individual movers today. We saw a few stocks that fell on downgrades. For example, Microsoft being cut.
Yeah, Microsoft dropping almost 2%. Goldman removing the buy rating on the shares, cutting it to neutral. Reason is the company struggled to gain market share in mobile devices. Goldman saying there's the threat of notebook cannibalization from tablets, and that's where Windows does not yet have a presence. And Goldman also cutting ratings on some retailers. Macy's, JCPenney cut to neutral from buy. Macy's pulling the retailers lower. Now, Alcoa, too. That stock in focus this week because Thursday is the unofficial kickoff to earnings season, but the aluminum company dropping as Deutsche Bank told investors to sell shares, putting Alcoa on the short-term sell list. Material stocks were the worst performing group of the 10 major benchmarks, Pimm.
Now, Courtney, a focus on financials as well today. A Swiss government report saying that they're going to have to actually hold more capital, increase the capital reserves at UBS, Credit Suisse, almost 19%.
Exactly. Panel saying UBS, Credit Suisse, they should have their capital equal to at least 19% of their assets. But that's much tighter, Pimm, than other countries. Under the so-called Basel III, banks they're supposed to have capital equivalent to about 10% of their assets. And the higher the capital requirement, the lower the risk, but the harder it is for banks to generate returns for shareholders. But both expect to meet those new requirements without having to sell new shares, Pimm.
All right. Thank you very much. Courtney Donohoe reporting from the New York Stock Exchange.